This video is about Wayfair, and as you can see from the daily chart, Wayfair is somewhat way up on earnings. So obviously the results were favorable according to the perspective of Wall Street. And before we look at the charts, let's just look at the actual results. So first quarter results beat analyst revenue and adjusted EBITDA expectations. Q2 guidance, which was given on the earnings call, was also comforting as it was in line to slightly above expectations. Wayfair expects Q2 revenue to be flat to slightly up year over year compared to Q2 of last year, which was in line with expectations. Now, analyst Evercore stated they see Wayfair as a market share gainer in the cyclical recovering home furnishing market. They believe Wayfair's risk to reward is attractive as cost cuts have put a floor under adjusted EBITDA, which limits downside and offers attractive upside when revenue starts to grow again. Okay, so we're going to find the floor and the ceiling based on this comment alone. And so in order to do that, we have to pull out and zoom higher to, say, in this case, a monthly chart. All right, so you can see price really has been range bound for the better half of the last 2 years within a 30 to say $70 price range. So this range bound price action has been described in trades within a $40 range. Okay, let's zoom down to the weekly chart, and then this is where things start to get interesting. So I'm going to remove this band here. This was resistance support. Now price has clearly closed above that, and so Evercore mentioning the floor, and so the near-term floor. See these buy wicks, and you see this little resistance here. That's at $50. So that's your near-term floor, right? And now on the upside, again, we looked at this level on the monthly chart, which was the ceiling relative to the floor at roughly 30. And so Evercore mentioned that the risk to reward was favorable, but according to the weekly chart, you only got about $7 more before you start hitting some headwinds in the form of resistance, in the form of sellers, right? So if you just kind of circle, these are all what's called rejection wicks. And so why wouldn't you get sellers stepping in at this level again? Again, this could be the buyers who got in lower and they're taking their profits, right? But never the case, within this big range bound $40 price action, you have a smaller $20 range sideways price action, right? So the way one should do, at least the way I would do, is play the extremes, kind of like down here at $50, right? Imbalance between buyers and sellers. In this case, the buyers outweigh the sellers, and up here the sellers outweigh the buyers. It's really that simple. And anywhere in the middle, buyers and sellers are pretty much evenly distributed, which is why you just get this, one can call it choppy, or one can call it sideways price action. Now, taking it back down to the daily, this is the gap on earnings, and then to finish the week, price gapped a second time. So clearly the momentum is to the upside. And as you can see, price is now above all the moving averages, in which case the moving averages serve as dynamic support. However, again, your upside is going to be limited. Take some off the table. at the $70 level. Thanks for watching. Subscribe. Please like the video.